What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart along with the altcoin market, which is starting to flash some positive signs happening that the momentum of downside action has really started to come to a conclusion in here. Over the last couple of weeks, we've talked a lot about the structure of Bitcoin, and I talked about this in Markets in the Morning this morning. We've looked at this from the inverse perspective. I made you guys watch an hour-long video last Monday. We've talked a lot about this, that these style behaviors can lead to another leg to be of equal magnitude of the previous leg. And I wanted to also show that is what we've actually seen over here on gold, the exact same thing. But at the same time, gold has reached a full measured move of what its previous range was and a full measured move of what the previous leg was of where we're at right now. And that we're seeing some optimistic things start to flash in the market that I want to show you. And of course, it would require that gold does chill out, because as we've seen through history, when gold goes through these big bull runs, well, Bitcoin tends to chill out during them. They are inverse correlated. They have an inverse relationship to each other, regardless of what the narrative is out there. There's been newsletters, videos, tweets, you name it, all showing the evidence of the inverse relationship between the two. However, gold has now hit this measured move. And the question is it time for it to chill out? Is it time for equities to go into an expansion and for breadth to open up? Can we find some signs showing up throughout the market that it is? And would it make any sense for the market to do that and for Bitcoin to go for another leg? Over the last couple of weeks, we've spent some time looking at this from the inverse perspective. On the bottom, I have Bitcoin upside down in an inverse manner. On the top, I have Bitcoin's peak from back in 2022. Last week, we went through that really long video discussing all the possibilities of that when this was published back in November of 2023 on looking at it from an inverse perspective in an attempt to remove any type of biases or emotional influences. Sure enough, we've done just that. We've now stalled out in here. Question is, are we going to get going? And like we talked about last week, a lot of times the way you can measure these things out is the length of the first wave can be nearly equivalent to the length of the second wave. We also saw that for Ethereum back in 2021 through 2022, that both waves were of equal length. In the event of getting a wave of equal length from where we are at right now, with that current low at least, that's at about $107,000. The reason we're discussing all of this with gold, this measured move happening in here, using these same things, is because that's exactly what we just saw happen with gold, with the same thing, where it pokes above the high, waddles around in here, gets just above the 382 Fibonacci retracement level, and then goes on. And what does it do? A wave of equal sized length. So there's kind of two advantages of looking at this gold chart here. It's one, it can kind of reinforce that discussion that we're having when we're talking about Bitcoin and another wave of equal length, but it also shows it actually playing out here for gold at the same time. But it does one more thing by also doing that, is to say, hey, look, that's the type of structure we're talking about over there on Bitcoin. That's the type of structure that we've seen actually play out on gold. And if that is the end of the leg, and we know there's this inverse relationship here that happens between Bitcoin and gold, and if that marks the peak happening in there, can we now start looking for optimistic things to start to show up in the cryptocurrency and equity market to be able to see cryptos move up? And of course, as we all want, to see breadth make itself apparent over here in the equity market, like in the Russell 2000. One of the things that we talked about over there in Markets in the Morning is that even on the relative strength index, something is starting to make itself apparent over here in the altcoin market that is different from what we've seen for the last several months. And it has to do with the relative strength index. We're looking at it on the daily time frame right now. For those who have studied the relative strength index, it's an oscillator. During a bullish period, it will hold 40 as its support level. And during a bearish period, 60 will be the resistance level. You can see that reflected here in the charts. During an uptrend, 40 is your support. And then in a downtrend, 60 is your resistance. The interesting thing that has shown up here in just the last few days, of course, is that we've gotten through what would be a downtrend bearish resistance level, meaning that the overwhelming bearish forces that have been present have now waned. Now, of course, to see anything significant happen in this market, we have to see breadth open up. And the opening up of breadth in the cryptocurrency market is often defined as alt season. Not saying it's alt season yet, but things you do look for are breadth. And I've spent a little time trying to create some type of indicator to flip itself on or flip itself off if breadth is performing well or if breadth is performing poorly. And as we can see, breadth has been completely dead ever since the literal peak of the market when we hit the 702 retracement back on March 14th. This thing only flips into a positive value if at least 70% of the coins that are in the list are in uptrends, which there's about 30 altcoins in this list. For the first time, it has finally started to show a little bit of life in it ever since the absolute Pico mark at the top. So we have some breadth that is starting to open up in the market, while relative strength escapes from the bearish resistance level. And while gold reaches a measured move extension at the same time as a measured leg of the previous leg, which we've been trying to talk about in these videos on how to measure those. Now, the thing about this thing when it comes to breadth is that it can flash false signals. But anytime that alt season or alt breadth and expansion opens up, it always flips on. So it's mandatory that it flips on because it is an indicator. The thing is, it can flip a false signal as well when things aren't really taking off. We saw it flip on back here, back in July of 2023, but the market still remained stagnant and nothing really happened until October. And then things started really kicking off and remaining in full force, pausing out there in December and January. And then things started cooking again over there in February. But we've essentially been dead for 6 months since the day we hit the 702 retracement. And for the first time, even though price has not set a new high from August 24th, we're flashing signals of the opening of breadth with a bullish divergence. Doesn't mean it won't have to still pull back and consolidate in here. But all of these things show exhaustion of sell side pressure. While hopefully we're getting a macro signal at the exact same time that hopefully gold is about to chill out after it's made 2 separate measured moves. So one thing I'll be looking for this to confirm itself, knowing that on the daily time frame, we can get false signals to show up in here that things are going to really get moving quickly. However, many times it does flash it correctly. But when we move further out, charts like the 2-day chart tend to give less of a false signal happening in here. First, you get the 1 day to flash it. Then we look for the 2-day to start waking up and flashing it. And then, of course, by the time we get to the 3-day chart, well, we full blown just have that breadth indicator very strong. So as of right now, for the first time since the peak of the market, this has woken up here just in the last several days. In the coming days and weeks, looking for higher time frame breadth indicators to flash it as well, but certainly an optimistic sign to see it flash itself after 6 months of talking about where's the breadth, where's the breadth, where's the breadth. We can visualize it on this chart. There it is. We might actually be seeing it start to show up. And hopefully that's in addition to the confluences that we're seeing for a measured move for gold, and that the bear RSI level of 60 has been cleared for the first time in 6 months. Again, none of this tells us that just because we get above that RSI level that it automatically means we go in a straight line up. This could turn into Wyckoff accumulation, with this being our selling climax, this being our automatic rally, our secondary test in phase B, and then having to do something like an LPS or a last point of support before it can then try to work its way out. What these things are telling us is that downside pressure has waned, and there's been an opening of breadth in this market, which we can even see here when I put 20 different assets on here versus Bitcoin. The vast majority of them have outperformed Bitcoin, which means there's more breadth happening in the market right now. And of course, we're all waiting for the infamous breakdown to happen here on the safety trade dominance, which is now teetering on that floor once again. We've seen things like SWI go absolutely soaring all the way back, nearly retracing the entire fall that happened since March in a matter of weeks. And hopefully, like with things like gold, we're seeing a confluence of multiple events occur at the same time, with a dynamic shift happening in the market across multiple indicators. These things are typically a slow process. They typically don't happen overnight. But it's really, really nice to see these dynamics start to change, and especially with the things we've talked about with breadth for so long, something is starting to wake up that hasn't been present for 6.5 months. So let's go. But all right, that's going to wrap it up for this one, guys. I want to thank you all so much for watching. Of course, you could check out my newsletters that I write over here on blockchainbacker.substack.com. We got a monster one coming out next Monday. The most recent one was 36 minutes in here with my audio recording. Of course, you could check out bcbacker.com with over 40 videos and 11 hours of content teaching you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. Teach you about a lot of different charts, effective tools, indicators, Wyckoff accumulation, and Elliott wave theory, along with the historical behavior of the market. But even in here, talking about that relative strength index, and that 40 and that 60 being the bull support or the bear resistance. And anybody who has studied relative strength index would know 60 is the bear resistance. And so it's very intriguing to see that we have gotten through that. Either way, you can check this out at bcbacker.com. There's links in the description of this video to bcbacker.com and to the newsletter at blockchainbacker.substack.com. I want to thank you all so much for watching. If you could, please like this video and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.